BC returns to us here. Fred, you live and work here in Hong Kong. I mean, you happen to be in Singapore today, but most of the time you're here. You know the market as well as I do. It has gotten really out of reach of a lot of people. There are screams. I mean, the papers are teeming daily with demands, moaning and groaning for the return of assisted purchase schemes like the HOS, and yet, we get evidence that maybe mortgage drawdowns are coming down a little bit and asking prices are coming down. Maybe the market's taking care of the problems. What do you think?
Well, I think in part it's driven not just by sort of local demand in Hong Kong, but also China is playing a big role with Chinese coming to Hong Kong to buy property, and they're less price sensitive. So I'm more worried that if prices do come down a little bit, that then we have overseas buyers stepping in again and snapping up what they believe is a good opportunity. So I'm not quite sure we're at the end of the housing boom in Hong Kong just yet. As long as there's a Chinese buyer waiting in the wings, it's very difficult to see prices really coming down quite sharply.
People with the means from China. I mean, if they if they have the means to get in to participate in the property space here, I mean, with all due respect, Fred, and I don't mean to speak for you, but they're not seeking where you or I live. They're seeking, Lee Chao Kee properties on Conduit Road, and they tend to buy these glitterati homes in very, very upmarket areas. They're not competing against the average person in Hong Kong, are they?
I actually think they do. The glitterati sales make the headlines in the papers, but there's also the so-called average person from China who's coming over and is buying regular apartments, and that is actually drawing a lot of supply out of the market. If you look at new developments, for example, in the mid-price range, they're very often snapped up by Chinese first-time buyers who are coming to Hong Kong. So I do think Chinese money is boosting demand to the detriment of everybody. And it's just removing supply from the market that would otherwise be there to depress prices.
And here I was thinking Bernie was part of that glitterati set. Lo and behold, apparently he's not. Let's pick up on this growth story that we're seeing in China. How important is growth remaining in China to the Hong Kong property market? Is there a correlation?
I think it's very important. It is really the Chinese economy that's driving both Hong Kong at this stage, the Hong Kong economy, and it is the demand from overseas or from Chinese coming into, mainland Chinese coming into Hong Kong. So I think the two are quite linked. And as I said, it's difficult to see the market in Hong Kong really come down sharply as long as there's a bid from China. We have seen some tightening in China. We have seen some slowdown in China that could potentially weigh at the margin on the Hong Kong market, but unless the economy really goes into hard landing in China, I think we're fairly safe in Hong Kong.
Hey, Fred, Marty, Sri, Karen, guess who was downstairs at Starbucks? Peter Churchouse from Portwood Capital, so we decided to yank him into the studio since we're talking about his forte. Hello, sir.
Good morning, Bernie. Sorry, I'm late.
Fred over there, Fred from HSBC, who's visiting Singapore, doesn't think that this boom in property is over. I was throwing this the latest figures from the Hong Kong Monetary Authority on a reduction in the drawdown in mortgage money as evidence that maybe things are simmering rather than boiling right now.
Oh, absolutely. I think we are seeing the pace of property lending starting to slow down. We're certainly seeing transactions slow down quite sharply over the last couple of months, and we're also starting to see the pace of price increases slowing down. The first quarter of the year, we saw prices up every quarter about 3.5%, 3.3%. May and April, that was slowing down to about 1.2, 1.3%. So it's still up, but the pace of increase is slowing quite sharply. So I wouldn't be surprised to see it in flat or negative territory by the end of the third quarter.
Is this going to do you think this is going to put pay? Do you think this is going to halt any public housing initiatives like resumption of the HO? You've got property tycoons, saying, hey, we should build more HOS flats. The fact is, a one-bedroom or a studio, 400-square-foot studio that used to go for $1,000 US a month a couple of years ago is going for $1,500 a month. I mean, no matter what strata of society you're looking at, it's pretty obscene in many cases.
No, I think that's right. I think the government will continue with its public home ownership scheme, and I wouldn't be surprised to see even more public rental housing built. I think they could even resurrect the thing called the PSPS scheme, which is a private sector participation scheme.
No.
Actually, that scheme was actually very good, except
Really?
it wasn't executed very well. If they control the execution a bit better, I think that would be a very, very good weapon in the fight against low-cost housing here.
Okay.
So,
Peter, let me bring in the other Hong Kong resident, Fred Newman, from the SGX.
Peter, you mentioned that the housing market has shown signs of slowing in Hong Kong, but one thing that still lurks in the background is I think that we have very low interest rates, that there's no sign of the Federal Reserve hiking interest rates anytime soon. In fact, the talk is now potentially about another QE stimulus program. Isn't there a very fundamental support for the housing market from low interest rates going forward, and with interest rates not likely to go up? Isn't there some fundamental support for the market?
That's exactly right, and that's why I'm not expecting a crash. I'm expecting a slowdown, and it's simply because of that. Also, you've got very strong underlying fundamental demand. You've got nearly full employment in Hong Kong. You've also got wages and salaries rising at 6-7%. The government's going to give their staff a 7% pay increase. Good Lord, they're higher paid than the private sector anyway. So you have got a very strong fundamental underlying demand, not to mention re-regulation in America, and Europe is sending private bankers and investment banks here as well. So I think demand is very firm.
Peter, thanks for letting me bring you up here, okay?